In this video, I want to just give you a quick example of what you do with the forecasting that we've done so far to extend it out beyond the first 12 months. The very first thing that I always do with that, I mean, it's pretty straightforward in Excel, assuming you've made all your correct formulas prior. You're basically going to start by extending it to year two. Now remember that because all of this is driven off of revenues and you've already grown your revenues to reflect annual instead of monthly revenues for year two, most of this should work well. I say most of this because there will be a couple of exceptions to that. You would certainly expect the revenue and variable costs all to be about 12 times higher, roughly. So no real surprises there. Depreciation, again, if you look at that, we're just depreciating a tenth each year, and so for now that's fine. Of course, interest and taxes, the interest is being read off of the amortization schedule, so I think we're fine with that. The taxes, same sort of thing, that's just a calculation from previously. The assets, big thing here that you just want to flag, and you know my thing about making sure we shade stuff when we're making a little bit of a change, is on the inventory. You saw it jump from, in this case, about $8,000 to 12 times that. The reason is because the formula that you have over here is saying we reckon that we're going to take about 50% of our monthly inventory, and that's what we're going to hold. Well, without making an adjustment, this has now suddenly gone to 50% of your annual inventory. So we're just going to divide by 12 there, and that brings it back in line. So your current assets are all good. The fixed assets, again, you're adding the depreciation, the depreciation's up there, you don't have to worry about it. So it's declining in value. For now, we're going to make the simplifying assumption, since for my business, what's in this asset is the building. We're just going to make the assumption that we're not having to go put a whole bunch more money into it. We can certainly talk about for other buildings, if you wanted to go in and think in terms of additional investment, you could. Going down to the current liabilities, this one, remember that at the end of the year you paid off your current liability, and so it had a balance of zero, and you did that by putting in that sort of just paying off the value. Well, we don't need that anymore, so we're going to go ahead and zero it out there, and that way we don't get to a negative, so that's good. Long-term debt, again, you're just paying off your principal, and that's accumulating, so that's all fine. All of the equity stuff should work fine. You do see this big retained earnings, and of course that is primarily coming from the fact that you've now got a year's worth being added instead of a month's worth, so it's going to grow up quite a bit. And we're doing okay. By the end of year two, we've got a balance sheet that's about $500,000 big, so it's grown a little bit. Go down here, just make sure, yep, receipts, you expect them to be about 12 times as big. Cash flows and operations, same sort of thing. Change in working capital, again, you don't look at this last time, the month 12, because that change is due to paying off, mostly due to paying off the current liability. But if you compare it to the others, it's sort of in range, so you're not making these huge growths from now. So again, if you looked at interest and taxes, again, those are just coming from above, so that's fine. We're not assuming either purchasing more assets or selling more assets right now. We can talk later about what you would do if you were. And we're not considering going out and either taking on more debt or any capital contributions. So really the only thing going on here is that we're paying off principal on the long-term debt, so that's there. And of course the free cash flows to equity are just mathematically falling from that. So we're now in pretty good shape. So all we're going to do now is we're just going to drag this stuff over. And I'm just going to drag it one column first because I want to clean up a couple of things here. we no longer need the formatting on that because we made the change once, and from there we're good. This is a little bit funny. Excel does this. Since that's a hard-coded number, if you carry that over with just drag it over, it's gonna add a 1 to it. And so we're just going to say, well, it's equal to whatever the prior one was. And then everything else, since we made no change to it, should be good. And therefore now we are in that position. Actually, I'm going to go up here and we're going to go ahead and get rid of those because those are really just extensions of that formula. But now we're in a position to just drag the whole thing over. And when we drag the whole thing over for 10 years, boom, all of a sudden you've got forecast for 10 years. Now, another thing I like to do, because once you get it to be this size, you want to make sure that all your formatting's consistent, and quite frankly, you probably care less about the pennies. You want it more readable. So I put a currency format on it. Actually, I'm going to take that off. We're not going to do it to everything. We'll just do it to these because there's no percentages out there. So we're going to put a currency format on it. And just like I did with the free cash flows, I'm going to go put the special currency format that's got colors on it so that it makes it easier. And then I'm going to get rid of the zeros. Last thing I'm going to do, now that everything's highlighted, I'm just going to double click. And what that does is shrinks everything down. Oop, messed up. Didn't go all the way over, did I? All right, well, let's do this again. Currency, more number formats, boom, boom. Get rid of the zeros. Double click. And so that's all we've done. And of course, on my screen, I have a little bit bigger screen, but that means that I can see all of the months and the years all at once because I've sort of reformatted it. And so, we are in a position where we can kind of review things. Usually the things that you're going to want to review are, did something really big jump out at you or change when you went from monthly to annual? Did it change the way you expected it to? I'll provide an example, a separate example, showing you how you could basically plot some of the relevant information. Primarily, you focus on the, the stuff in the gray, but so that you can use the plots to more accurately assess whether or not the changes make sense. But from just a practical standpoint, that's all there is. And then, of course, you want to save your result here. So that's all we got. Well, that's the next step. Thank you.